Hey y'all, welcome to another episode of Talks with the Tax Cop. That probably seemed crazy as heck. I'm sure it did. But y'all don't blame me. Y'all don't blame me. It's been a minute since I did a podcast. I'm messing up on my little production. I gotta practice my production, y'all. I'm gonna get it sweet. I'm gonna get it so sweet. I don't even know what episode we on. We are still in season 2. Your girl has not been consistent. For those of y'all don't know, look at the screen. For those that are listening, hi y'all. My name is Patrice L. Berry, EA, aka the Tax Cop. I am the principal owner and founder of Total Tax Experience, but on socials, y'all know me as the Tax Cop. The reason why I'm called the Tax Cop is because I'm out here telling y'all how to demystify and break this thing down when it comes to the tax code and actually making sure that we are following the rules and doing what we need to do in compliance. Y'all, why? Because can't nobody go to jail, right? I got to tiptoe on the line. I am not a line crosser, but I will tiptoe on the line and do what we need to do to make sure that we're doing what we're supposed to help you understand taxes for you and your business. My motto here at Total Tax Experience is help us, help you, help yourself. And we are out here really focusing and have a heart for the small business owner where we can be able to help them audit proof their life and their business. All right. So that's who I am. That's what this podcast is all about. It's Talks with the Tax Cop. What we do is I take time to not only educate you all on things that are interesting, that at least I find interesting, and hopefully I can bring some tips and tricks and things that y'all can just nuggets that y'all can hold on to and can consider, as well as I take the time out. And when we get a guest, I love interviewing people. Y'all, why do I love interviewing people? Because for 21 years, I served as a federal auditor. I worked in an OIG shop. So I didn't work at the IRS. I did work at Department of Defense, shout out to DOD OIG, and Department of Commerce OIG. And the best way to get information is to get it directly from the source. So I love actually reading criteria. I know it's crazy, right? So that's why I like taxes. I love reading the tax code. I love reading criteria. I love reading cases. And I love interviewing people and understanding their procedures and processes as to what they do. That's truly why it's so easy for me to segue in and focus on small business owners, entrepreneurs that are in business from inception to about 10 years. That's pretty much my sweet spot. Not that I can't work with anybody who hasn't been in business longer than that, because I do have some clients that have been in business longer than that. But I really like that foundational stuff. That's where that whole tax cop thing, like, baby, let's get it right so you don't go to jail. And let's get you a good foundation from the start so that we can make sure that things are working the way they need to work. So before we get into any of our segments for today, because it's been a minute since we've done a podcast. Y'all know this is gonna be absolutely kind of wonky, but I do want to talk about a couple of things with you all, right? So we are in the season where we go into a holiday season, or it's the end of the year, and people start reflecting on woulda, shoulda, coulda. I know, because I've actually been through that. That's why it's kind of been quiet for me to really take the time and process. We can beat ourselves up, we can tear ourselves down, and I just want to encourage you all right now to take the time and give yourself some grace and mercy. Really, I have been going through that. Thank God I have an awesome team of ladies that pour into me. I got some business besties that pour into me and check in on me. I got some good girlfriends, and I have an awesome family and husband that take the time to say to me, it's okay to take a break. It's okay to step away. It's okay to work on your mental health. It's okay to breathe. And so that's what I want to encourage you all today, to give yourself grace and mercy, especially as we come through the end of the year of 2023. We're going into our holiday season, where this is coming out the week of Thanksgiving. And so those of you who are with your family and friends, are going to be with your family and friends, really be in the moment. Like, that's really what I'm looking for this week, is to really be in the moment with those that you are around and those that you love and those that you can spend some time with, because those memories are the things that, when lo and behold, when our time comes and we are dead and gone, it's going to be those memories that people remember. It's gonna be, remember that time we did this and we played game night and we ha ha ha, or girl when she failed and we had to pick her up, like all those things. It's the memories. Trust me, I know. I can tell you because I have loved ones that, of course, we all got loved ones that are deceased. My mother is deceased, and even now I think about her, my grandmother at this time of the year, the foods, the smells, the rolls, the potato salad that I still can't make, collard greens that I do know how to make, but I do it my own way. Those memories will be what you need to hold on to and work throughout the season. And I pray that in most cases, the memories that come to your forefront are happy memories, are loving memories, are enjoyable memories, and not stuff that's going to trigger trauma. And if it is, y'all, find you some help, find you somebody to pray with, find you a therapist, work through that stuff, get in a quiet corner, journal, get those things out. Don't harbor those things, trust me, because for 2 weeks, like those who know me in person know that no shade to depression, I really don't have, like I may be sad, but I don't go into a deep funk, but I've had some time in the last couple of weeks that I have, and I've had to work through that funk and figure out what was going on and kind of dissect that thing. And I'm not 100% through with it, but I'm on the other side working through it. And part of it is the ups and downs of entrepreneurship. Part of it is trying to do all the things and can't do all the things. And so therefore, I want to encourage you all to give yourself some grace, some mercy, some love, some encouragement, especially at a time where Thanksgiving should allow you to be thankful, grateful, reflectful. Some people don't have what we have, and some people have more. But to be able to, if you have loved ones you can spend time with, take the time and do it. If you have food, shelter, ability to walk, ability to see, it's the small things. Water to bathe in, just the things that you can be grateful for. Take the time and say, God, I thank you. Or Muhammad, I thank you. Or Buddha, I thank you. Or Allah, I thank you. Y'all know, because Patrice done messed up talking about some Muhammad. They was like, who is she talking about? Does she not know religion? I know Jesus. That's who I know. No shade to anybody else, because I'm not trying to isolate anybody else. But whatever or whomever, universe, whomever it is, take the time to be like, I'm grateful to be in this space, in this moment, in this presence now. And as you take me through the rest and to the end of the year, may all that is supposed to happen for me happen for me. And your grace is sufficient enough to get me to where I'm supposed to be. Continue to order my steps and get me to where I need to be. All right, so let's jump into our segments. Our first segment in our show is auditing all. Auditing all. All right, so this is a topic that I have. Let me make sure I put up. Y'all know I got my screens out of order. Boom! She got it. She got it today. She got it. All right, y'all don't see me dancing. It do say it's supposed to share the screen. I'm not on the right camera. Let me select the camera so y'all can see me doing in the corner. She got it. She got it. Y'all like, she needs to get it better. She working on it. Her is working on it. Okay. So we are in my infamous, I love it, Bradford Tax Institute letter. And this is a topic that I've hit on before. I've hit on this before, y'all. And it's a topic I'm going to come back to. But we're going to go through this article. Do not, and I only say that because, it's the holiday season. People are like, oh, let's go to the casino. This is what I think they do. I don't know, because I be in the house eating potato salad and collard greens and stuff like that. But after a while, people want to go out and do some stuff, right? So don't let your weekend gambling create a tax nightmare. I need some, I got to work on my sound effects. Boop, 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 like Freddy Krueger. Boop, 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 boop. Is that the Freddy Krueger sound? Y'all let me know. If you gamble, you must pay attention to your taxes. We're going to go through this and I'm going to tell y'all, we're going to actually talk about this, but I'm going to tell y'all really what's the best thing to do if you're in a situation, period, when it comes to gambling, right? Imagine this. You gamble during the year, lose money, and pay $13,898 in taxes on your gambling activity. Y'all see that? Look, y'all can't even see the whole screen. Come on, girl. Let me see. Do I got it? Nah. Did I make it small? Let me see. Can I zoom? Let's zoom down. Yeah, all right. I know it's a little bit. Okay, that's what we'll do. Those of y'all like, Patrice, make it big. But I'm trying to get y'all to see the whole thing, okay? You gamble during the year, you lose money, and you pay $13,898 in taxes on your gambling activity. This or worse could happen to you as a casual gambler. You will see later in the article how it happened in real life. But first, here's a quick look at the federal income tax rules for non-professional gamblers. Yeah, some clients, I'm not gonna lie, I got some clients that I'd be like, you sure that you not like a professional poker player or whatever? Because like you killing it. Like you like this seemed to be a job for you. And I've said that and thought that about some clients and had to ask them, so do you do this full time? Okay. Your winnings are above the line taxable. Your losses are below the line itemized deductions and thus deductible, but A, only to the extent of your winnings, and B, only if you itemize. All right, so let's get this straight. Let's break this down. Because when they talk about the line, for anybody who knows me, I call the line the queen. Right? So adjusted gross income is the line they're talking about. Above the line winnings that's other income. You're gonna get taxed on that. And then they say losses only go up to tax to winnings. We can only, so if let's say you gambled and you have $20,000 in losses. I'm gonna do nice round numbers. You have $20,000 in losses, but you have $10,000 in winnings. You are only going to be able to knock out that or zero out that $10,000 of winnings if you can itemize. And normally in a case like that, if you got that and you pay some taxes, some state taxes, and you have a mortgage interest, you're going to be able to itemize because them losses are going to be able to take you over the top if they're that high. Okay. But you do not get the full $20,000 loss, nor does that additional $10,000 in the example I just gave help you to lower any taxable income. It's not like a business loss. It is not like a NOL, net operating loss. If you're not a professional, like that's not your job. Okay. So I need you to understand that y'all got to keep receipts first and foremost. We're going to talk about it. You're going to have to keep receipts of your gambling winnings and losses. In most cases, most casinos give you a summary of it. You need to provide that to your tax preparer, or you need to be running a log of some sort saying, I won this day, I lost this day, and this is what it added out to. Okay? Y'all need to provide that to your tax professional. Why? Because it keeps you covered, and I can tell you for a sure enough fact, that if the IRS asks a question, because I've been in this case, and they ask for the support, I've been in this case for a couple of clients. We've had to pull the win-loss statement and build and do the calculation and explain it to prove that the losses we are taking legally let us be able to offset the winnings. So it's not a game. Get that documentation. Y'all know the auditor and me, documentation. Y'all need to go and get that. Okay? Casinos and other payers of your winnings may have to report your winnings to the IRS on Form W-2G and send a copy to you. In other words, the casino snitching on you. They have already snitched. The IRS already know. And if you do not report all of your winnings, you're going to get a notice from the IRS from the underreporting audit office. They're going to send you a notice. Ask me how I know. Ask me how I know. You're going to get it. So if you don't report everything, do not think they don't know. They already know. Just like they know how much income you have, just like they know how much of your retirement came out and how much taxes you paid. They know because the casinos are telling it. That's what they're supposed to do. And it's going to happen on a W-2G. And if you know you do a lot of gambling, I'm going to need y'all to go pull y'all transcripts. Transcripts do not normally come out until like May of the following year, but you may want to do an extension and be like, let me make sure I got everything because I might have misplaced my papers. This is not only for casinos, but this is also when you're doing them scratching stuff, right? They report that too. When you at 7-Eleven doing scratch offs, and if you hit or whatever, like y'all got to keep track of those too. So when you going and you just getting some tickets and you keep track of what you spent. Please keep track of your what you won, keep track of what you're losing and what you put in as an investment because all of that matters. I know it's the dopamine. Boom, you need that hit. I get it. But you could mess yourself up tax wise. And that's not the intent of you gambling and be like, oh, if I hit, right? What would I do with the money? Not trying to give everything to Uncle Sam unexpectedly and not plan for it, unless you plan for it. So here we go. Wilson, who is married, filing jointly wins $15,000 and loses 40. Two things here. His itemized deduction for his gambling is limited to 15,000 because that is his winnings only. Okay? If he doesn't itemize, he pays taxes on the 15,000 with no offset for the losses. Y'all better this is what I'm saying, keep track because those losses may be able to allow you to itemize. Okay? Let's review. Wilson could pay taxes on 15,000 even if he loses 40. Now you can see how this might can get ugly. Let's take a look at a recent court case. All right. I love the Bradford tax letter. All right, here's the Bright case. Jacob Bright gambled extensively and lost more than he won at 3 Midwestern casinos. Bright had several large wins at slot machines during the year. As required by law, the casinos reported those winnings on IRS Form W-2G. Y'all might be like, oh, this is my life, right? Casinos must file this form. I'm reading off to the side. Y'all probably like, what is she looking at? Because I'm reading on another screen because my eyes. Casinos, excuse me. Where your girl at? Casinos must file this form whenever a gambler wins $1,200, keep your number right, $1,200 or more at a slot machine. So they gotta file. So now we know the limit. You're gonna get a W-2G submitted to the IRS. If you're doing slots, and you won more $1,200 or more, the IRS telling on you. Okay, so now we know what that is. Bright's W-2Gs for the year totaled a whopping $110,553. This is what I be talking about. When I see stuff like this, I be like, you sure this not your job? What? That's his winnings. That's what happened on them W-2Gs, y'all. $110,553. Bright hired a tax preparer who classified him as a professional gambler. Woo! And listed $240,895 of gross gambling receipts and an equal amount of losses on his Schedule C. This is why we're asking, like, what are you doing? Now, of course, now we got to come back and figure out, well, what makes me be a professional gambler versus a casual gambler? In most cases, most of y'all are casual gamblers. But if you're a professional gambler, like this is your business. This is what you're doing. This is how you do it. And we'll figure out what else we need to make sure we can qualify as a professional gambler. Then that's a profit and loss. That's what a Schedule C is. Money went in. I put some expenses in. There's so much more we able to deduct and leverage. But gambling winnings and gambling losses still up to the offset. Okay? Without having to worry about, this is why they did it as a professional, without having to worry about if they hit that itemized threshold or not. On an audit, the IRS concluded that Bright was not a professional gambler, accepted the reported $240,895 in winnings, disallowed all of them losses, and asserted $68,214 in taxes plus $13,643 as an understatement penalty. That's it. This is what I'm telling y'all. Normally, this is why you want to pull your transcript, your wage and income transcript, and wait to file your taxes if you know you do a lot of gambling. The reason why is because of not necessarily this case, but I'm telling you, they will hit you with an underpayment penalty if you don't report everything. And I've had some clients that they've given me the stuff. We filed the taxes. Before the wage and income stuff came out. And the IRS hit us back with a letter and was like, you didn't report everything. I'm looking as the tax preparer like, well, I did report everything that I knew of. And from then on, because I know if you a heavy casual gambler, I wait until wage and income transcripts come out before I do an extension, and we wait till later on in the year to do that tax return. Because I go and I pull the wage and income transcripts myself to make sure we have everything so that I can do, this is some audit stuff, right? So I'm auditing your stuff before we ever get into it, because I don't want to deal with the IRS on an underpayment estimate that we could have avoided if you would have kept better records, and or if I had done my due diligence, which I do go above and beyond, and go pull them transcripts and cross-reference to the support you gave me. Once I know that we have everything that the IRS has, I'm good to go. Let's rock and roll. Let's do the tax return. Okay? And especially if we got the win-loss statement, and I'm like, we winning. We got everything in our possession to make sure that if the IRS was to ever come back, we can refute the position. I like doing stuff like that. I like to be prepared. Why? I told y'all, I was an auditor for 20-some years. I don't want to be caught off guard. Okay? Bright petitioned the tax court. He admitted that he was not a professional gambler, but claimed that his gambling income should be either $110,533 or zero. Now let's see what the tax court says. The tax court said most amateur gamblers are not good at record keeping. Y'all, they said, this is Bradford Tax, right? The IRS. I keep telling y'all this. Most of y'all not good at record keeping. True to form, Bright kept no records of his winnings and losses. Y'all make sure y'all have an account and y'all go pull that win-loss statement. I can use the win-loss statement, and it's good tax professional can use the win-loss statement to help leverage and support where you're coming from if the IRS was to ever ask or try to disallow any losses. Okay? The tax court refused to reduce the amount of Bright's gambling income since he provided the court with no evidence. It should be less than $240,895. Casino's records and Bright's testimony made it clear that Bright didn't have any net winnings for the year. His bank statement showed he was broke most of the time. The tax court decided to cut Bright a huge break. He normally used a player's card when he gambled at the 3 casinos, so Bright had casino win-loss statements based on his player's card to show the tax court. 2 of the cards were annual statements, while 1 casino provided monthly win-loss statements. Under the authority of the Cohan rule, which allows the court to estimate expenses where there is some basis for doing so, the tax court used the win-loss statements to determine the minimum amounts Bright must have lost. And the court did this in a way that was particularly favorable for Bright. It determined separately the minimum annual losses he must have incurred at each of the 3 casinos where he gambled. The 2 annual casino win-loss statements showed net losses for the year, and 8 of the 10 of the monthly win-loss statements from the 3rd casino also showed losses. The tax court added to these losses the amount of winnings shown on each Form W-2 for each casino. The court reasoned, rightly, that Bright must have lost all the W-2G winnings to have net losses of each win-loss statement. So that's like the example I gave y'all. Yo, if he doing that all day and all his net losses, he exceeding it, right? The losses, that 20,000 versus 10,000 in winnings for the year example I gave you, yo, he lost everything. So that $10,000 winnings, he lost that and then some. In this case, this gentleman lost that $240,000 and then some. That $110,000 and then some. This is what this is saying. After adding the 110 shown on the W-2Gs to the losses shown in the win-loss statement, the tax court ruled that Bright had total losses of $191,756 that he could deduct as itemized deductions on Schedule A. This is why I'm telling you, in most cases, y'all need to have this documentation, because it will push you into itemized deduction stance if you got the good record keeping, to make sure that we can get and knock out those winnings to zero, because that's what we want to do. We want to net those winnings out to zero if we can. and if you have the support. If you're not providing the documentation to your tax preparer, you need to get into the habit of doing so. Now, this is the tax cop mode. You need to get into the habit of giving that tax preparer the win-loss statement. My clients know that if you don't provide me no win-loss statement or some record of what your losses are, you get taxed on that. You get taxed on your winnings. Because if I don't have the evidence when it's time for us to prepare the taxes, until you give me that evidence, all of that is taxable income. The IRS not gonna come get me, or you, right? You gonna pay whatever, but they not gonna come get me while they got my fingerprints on file and take me to somebody's jail or fine me because I know better. I'm an enrolled agent. I know, like, this is basic stuff for us. I know better than that. So we not gonna be doing any stuff like this. It just ain't gonna happen. Okay? So definitely work with a tax professional, or for those of y'all that are like hearing this and like, yo, I didn't even realize that, give your tax professional all the documentation, all of it. Win-loss statements, W-2Gs, wage and income transcript, all of it, so that you are covered, because you don't, $13,000 is what they was going to tack on in underpayment penalties on top of the $62,000 that they was going to get them for tax. Okay? That left him with $49,130 in taxable winnings for the year. The tax court also held that he didn't have to pay any underpayment penalty. All in all, Bright did about as well as he could have hoped in tax court. But keep in mind, here you have a guy with no gambling winnings, no money, and a tax bill of $13,898. Okay? What did Bright do wrong? Bright testified that he lost more than he won gambling, and the tax court believed him. But he had no proof of his actual losses of the tax court that the tax court could use. Gamblers, including recreational gamblers, are supposed to keep contemporaneous, and otherwise detailed records of their wins and losses. Just like those investors in the stock market, those traders in the stock market, keep track of your own when you bought it and when you're selling, so your gains and losses. This is the same thing. This is the same concept. Keep your own records, because sometimes we as professionals, systems, organization mess stuff up. And they're not doing it intentionally, but if you know and you have your own documentation to be like, I bought this on this day for this, I won this much on this day, and this is how much I put in the slot machine. Without a shadow of a doubt, you can be able to defend yourself or work with a tax professional to help defend you if somebody like the IRS come and be like, you need to come up off some more money. And you're up here like, I done gave all my money to the casino, so I think you need to go get it from them. Then that makes it kind of difficult. Okay? Ideally, this should be in the form of a paper or electronic gambling log or diary containing the following information: date, name and address of the gambling establishment, type of wagers you made, slot, table. Those are the main ones that I've seen on W2Gs. Amounts you won or lost during each gambling session, names of any other people with you during the session. You don't have to keep track of each individual bet you made, but at least know what's going on that day, right? Instead, you can track gambling win and losses by the gambling session. At the end of the year, you separately add winning gambling sessions and all your losing sessions, and make sure we have that some way in to give to your tax preparer or when you're preparing your own taxes. Key point: recreational gamblers roll snake eyes if they don't itemize when they file their taxes. Why? They get no deduction for the losses, but they pay taxes on all of the gambling winnings. And nobody wants that for y'all, for real. If you're out here gambling, if you gambling, you got losses. And I want you to be able to get the benefit of every loss you can, if we can do it. Okay? There is no precise definition of what a gambling session is. Generally, it means any period of play at the same game at the same establishment for up to a day. For slot play, the IRS proposed a safe harbor for determining a gambling session: any period of continuous play at the same gaming establishment up to one calendar day. Key point: Had Bright tracked his wins and losses by the session, his losses during those sessions would offset his session winnings, undoubtedly reducing his winnings substantially for the year. In other words, if he had kept his records, we wouldn't have been able to take all the money, offset all the money, because he definitely would have been able to itemize, and they would have not. Then he would not have incurred $13,000 in taxes. The obvious lesson is don't be like Jacob Wright, particularly if you gamble a lot. Keep track of your wins and losses by the session. You never know when you'll win a big jackpot that will be reported to the IRS. This is exactly what happened to Bright. He was a losing gambler overall, but he won several big jackpots that were reported to the IRS. You should also do the one thing Bright did right. Always use a player's card when you gamble at the casino, so your wins and losses will be electronically tracked and you'll be able to obtain casino win and loss statements. But note that the win-loss statements are not really a good substitute for session-based gambling records you create yourself. Win-loss statements do not track your wins and losses by the session and that are not always accurate. That's what I just told y'all. So when you go in and be like, I did this for the day, this is about what I spent, keep your own record keeping because it will make a difference to offset that. Now, I do leverage win and loss statements, but even when I do trades or I'm buying stocks, I keep my own records. I keep my own log because you got to check people. It's trust but verify. Just like when I say I pull the transcript so I can check, it's a whole trust but verify system because anybody can mess something up. Anything could have glitched in the system. Yes, we're relying on technology, but we all know technology can goof up on us sometimes. All right. The casinos themselves typically include disclaimers on their win-loss statements, noting that the statements are only estimates, not accurate accounting records. Both the IRS and the tax court often use win-loss statements when no other records are available, but they don't have to. And I can tell you in almost every instance, I've had to represent a client when it came to win and losses for gambling, and I've had to represent clients in this situation. The IRS and the reps have been more than gracious to accept those win-loss statements. It's gone up the chain, but in most cases, my clients have been able to reduce and remove the underpayment penalty and make sure that we're good to go because we could prove it, right? Ask the IRS examiner to estimate your annual losses the same way the tax court did Bright's. If a win-loss statement shows an annual loss, the amount of any form W-2Gs issued by the casino should be added to the losses shown on the statement. These are the takeaways. If you gamble, you need to become a gambling bookkeeper. In other words, keep your records. With no records, you are at the mercy of the IRS or the courts. There are not good places to look for mercy. Most gambling establishments, including those online, the game tracker or the bets y'all are doing, y'all, this let you know I don't gamble. I'll gamble. What's the game day? Is that right? Is that one? The one they do all the time, Kevin Hart and them be, y'all, Kevin Hart, please don't sue me. Come after me. Cause I just know the commercial that you in. So y'all don't be like, Kevin Hart, this is what she said. No. It's the commercial he in, and I cannot think of what the commercial is. Okay? Y'all know that commercial that the comedian is in, and he advertising, and he's sitting on the couch, and they on sports. Whoever that, all those records, when y'all online doing all that stuff too. Most gambling establishments, including those online, have players, cards, or other records that can help you establish your wins and losses. You want to track your gambling by session because then the individual winning bets do create above the line taxable income. Meaning, I played on today, 11/20, right? November 20th. I played and I put in $30. I won 5. But then I lost 50. We're gonna net that out. So this is what I say: put in 30, won 5, lost 50, playing online Uno. Because that's about all your girl gonna do. Playing online Uno. Okay? Keep your log somewhere so that you can get it, so you can support it and give to your tax professional or use it when you prepare your taxes. Um, if all you have are the casino or win-loss statements, you are not dead in the water. Although the IRS and tax court do not have to take it, they often do because that's the only thing that's available. Remember this important point. If all you have are win-loss statements that show a net loss for the year, you need to adjust the loss amount. And jackpot wins, including those reported on Forms W2G, to the loss amount because you had to lose those winnings to have a loss for the entire year. So like that's what I was telling you overall. The 2010, we won 10,000. We had a mass loss for the year of 20. We at least lost 10, and we can at least support that. That don't be trying to do nothing extra. Don't do it, right? And then another thing that I want to point out is that at the state levels, I know I live in Maryland. So in the state levels, a lot of times because the amounts are so large, when we're talking gambling losses, they can get really big and the itemized deductions end up really huge. States will come back and say, we want to see your Schedule A. We want to see the support for how you got to that, and we want to see the documentation as to how you arrived at that being your itemized deduction amount. I know that happens in Maryland. That I get some pushback for some clients where we got to go back and we end up in hearings where we have to support how we came up to the itemized deductions amount. This also happens with charitable contributions. We'll do a discussion on charitable contributions as well in the documentation y'all need to have. I've actually have a podcast where we talked about that during our audit and all section. Okay. This has been a rather long segment today just because I know it's the holiday season. I know people are going to go look to do stuff for fun, and I want y'all to be safe. I want y'all to know what's going on. So let me tell you the tip and the biggest takeaway. If y'all already know they reporting out on $1,200 if you hitting a slot and you won that much money. So this is what I need you to do. The casino will take taxes out for you. And if you're safe, go ahead and take money out at the federal and state level. Go ahead and let them take the taxes out. Because if they take the taxes out, worst case scenario, you're going to get a refund. Especially if your losses exceed your winnings. And that way, y'all out here doing this like this your job, and you making the money and you getting the dopamine hit, you at least know that the tax man also got his cut. And you can keep him whatever you got, that's what you got. To do whatever you need to do with. All right, so I'm gonna come on the screen so y'all can see your girl not playing. I'm not playing with it. I'm telling you the best thing for you to do in a situation like this is when you're winning and you already now we know the amount, right? Go and make sure that you are having taxes taken out. Have them take federal taxes out, have them take that state tax out, right, as well at the casino that you're in. Just cover your bases. I would rather you cover your bases so you're not panicking. And now you not only, like in this case with Mr. Bright, not only did you lose big for the year, but you also owe Uncle Sam and you don't have no money because you didn't gamble all your money away. I'm not judging anyone. I'm telling you what to do to protect yourself. Not only is it record keeping, but let's go ahead and pay the taxes. Let's go ahead and have them pull the taxes out. And if you feel like you have no control, then there are like this is a thing and you feel like you may be in an addict situation, then that's for a therapist, and those they have programs for those, and find programs. It doesn't hurt to tell somebody the only time I feel happy is when I'm in a casino and I hit. Or just the vibe or whatever. That may need more therapy, right? And so I'm here for it. But in the meantime, I don't want you to have to pay for a therapist and be like you done lost all your money. And then you like, oh my God, I'm stressing out because the IRS, and you feel like you're running from the law and they're going to take your stuff. I really don't want that for you or anyone who's listening to this, right? So definitely go out when you're doing it. I'm not going to say don't gamble. I'm saying every time you hit, whether it's at the $1,200 amount or not, when you hit, tell them take taxes out. Get that monkey off your back from the tax man. When I say the monkey, I'm talking about the tax man monkey. Let's get the tax man monkey off your back. That way you can breathe a little bit better. And then everything else you take in stages. Okay? All right. That's what we have for our audit and all. That's pretty much Um, let's go to balancing. Let's go to balancing the beat. Let's talk about this real quick, right? Um, so balancing the beat, I really want you all to know that and when it comes to taxes, a lot of this stuff is reportable. I'm gonna go back to what we were talking about earlier. I'm gonna keep with the theme, right? They already know. They done snitched on you. Your employer snitched on you. We know the casino snitching on you if you make a certain amount of money. Your retirement company snitching on you. Everybody's sending all these documentation. That's what now we're getting ready to go into where Venmo and PayPal and everybody like those merchants, they gonna snitch on you and send 1099Ks. Like everybody is telling the income. Your record keeping and your notes and your documentation and the filling out of organizers and telling the scenarios and keeping all those, it's not just the tax forms because everybody tells you to keep just the tax forms. It's the way you're making these moves, the decisions you made, the notes you're making. Oh, we did this, we went here, we ate. Especially for my business owners, keep all of that stuff. Yes, we feed it all into good financial statements, but some stuff that ends up on your financial statements don't end up on your tax return. The reason why is because everything may not be reportable on a tax return, right? It may be important, or some of it may just be information stuff, but it does not always give you a tax benefit. And lately, I see on social media people are making decisions, especially at the end of the year, to buy stuff and do stuff because they feel like it's gonna give them a dollar for dollar tax break, and it's not. Taxes are percentages. The only thing that we really getting dollar for dollar breaks for are credits, and and we praying that some of those are refundable credits because we want them to kick us some money back, right? So you really have to understand what you're out here doing. Even itemized deductions, the only dollar for dollar benefit I've ever seen really for itemized deduction is when it comes to gambling. This is why I'm talking about it. Because gambling losses from an itemized deduction state automatically knock out gambling winnings, only up to the winnings. That's the only dollar for dollar reduction I've seen. Everything else is percentages. And so you gotta understand that this is fractional. And I know you're like, but how do I know what the fractions are and this, that, and the other? Just keep your documentation because in some cases we will be able to use the tax code to leverage some of the things you're doing. And in some cases we won't. We talk about, and we have talked about in the past, those gambling, those like for people who are investors, you only get to take $3,000 in losses. You can have 15. I have some clients who have $20,000 in losses, and we have to carry them forward until we spend that stuff off to offset capital gains. Capital gains. So those capital losses in the stock market, we can only take up to $3,000, and then we got to carry everything else forward. So you really got to know your strategies and who you're working with and what you're doing. And you got to have good records. And you need to know, well, you know what? Like in a capital gains and capital losses situation, I still have some losses that need to carry forward. Please consider them because if you have a whole, you know what I'm saying, you want to reduce those gains as much as possible. There are several different rules out there. And this is the thing that I want people to understand. It's going to sound crazy. Reading is fundamental. And there's a lot of information in the tax code, and you can't just always go to Google. Making the time and taking the investment to either do a tax consult with a tax professional, or actually, if you have some intricate stuff that you've been doing now that you've been doing your record keeping, handing that off to a tax professional instead of you doing it yourself, either doing a consult or so you can ask some questions. And in most cases, a good tax professional is going to charge you for a consult. Don't get mad. If it saves you some money or saves you some moves in the back, then it's worth it. But I can tell you out here, some of the moves y'all are making are not going to be dollar for dollar offsets. It's not designed to be that way. Even if we want it to be that way, it's not designed to be that way. Taxes are a fractional percentage thing. That's why I got tax brackets. Okay? And I want y'all to understand that. And I want you to come to a safe space where, just like we are learning how to do several different hustles legally, I want you to know how to do taxes legally. I don't want you making stuff up, because I don't want you to be in underreported situations. And I don't want you to necessarily have to end up on the resolution side of the house with me as an EA for no reason. Because if you come to me and we got to solve a tax problem, I'm going to do my due diligence. I am going to analyze this. Y'all got to remember, I have an auditor's brain and I attack accounting and taxes from an audit mindset. And so if you're on the hook, I can't legally, comfortably tell y'all you don't owe what you owe. Now, if we can legally prove that you don't owe, or we can legally reduce it, then I'm all for it. I'm team for reduction. But did if you did not put yourself in a situation, or you was out here living la vida loco, right? I did say loco, right? And I know you out here living crazy, and you now don't want to be held accountable or responsible, then I can tell you, total tax experience and a tax cop is not somebody you should come talk to, because I am going to tell you the truth in love. It may feel like I'm cracking your tax face in love, but I really want you to get it right, and I want to hold you accountable. And anybody who's dealt with me knows I don't always take on clients just to be taking on clients. It ain't about the money for me. It's about the education. Now, mind you, that don't mean we not over here making money. We making money. We are a business. We are a business. I'm here for the education and allowing people to be proactive, because I feel like if you are more in control of your taxes, because they're not going away, y'all. If you're more in control, then we can help you leverage that to build what you're trying to do with your entire legacy. Whether you're a W-2, whether you're a business owner, however you need to. My goal really is to help you audit proof your life and your business. Because if we are audit proofing our life and our business, then we can sleep at night. We can make more sound financial decisions when we move forward, and we can study other business owners, other people out in the market, take other courses to make our money do things for us. And we don't got to worry about, well, do I got to pay taxes? We know we're going to pay taxes, but how much taxes am I paying? Am I paying my fair share? Because I don't want to pay more than I need to. And so I find that a lot of people come sometimes and they don't want to pay their fair share. Because for some reason, we are of the belief, and I get this a lot, that the former president didn't pay no taxes. Now, we talking individual taxes, but he got businesses. So it's not like taxes aren't being paid. Anybody who know anything know that business owners out here paying a buttload of taxes when you start running payroll. And then if you run sales for products and services, then you pay a sales tax. All of us are paying sales tax when we go to the store. So everybody is paying some sort of tax. Unless somebody gifting something to them, we paying taxes. And sometimes in those cases, depending on how that gift came, is what it is. Okay? All right? So that really is, we got to know the difference between reportable and taxable. Because everything we report ain't taxable. And so I'm going to do some better segments, right? When we go through these segments, taking examples of cases. And so we can see, okay, this was reportable, but this wasn't taxable. And so gambling is a great space to be able to do it in, because not only is it reportable, but depending on the circumstance, sometimes them gambling winnings can be taxable. We got to tell it because they know it. Sometimes it ain't taxable, but sometimes they're taxable. And now you have prepared yourself and learned some tips and tricks on what you need to do, so that if y'all out here and say, you know what, we gonna hit New Year's and we gonna go to the casino, and if I hit big, baby, 2024 gonna be set off right, you now know how to leverage that. Okay? All right, I want y'all to be safe. Let's switch, because I'm like, let me love you, right? Balancing the beat and let me love on you kind of merged into each other this week. And I just want you to know, from the bottom of my heart, I truly appreciate you all having patience with me. Thank you for letting me be transparent. Thank you for listening. For those who tune in and who listen, for those who are liking the content, let me know, what else do you want to hear about? If there's anybody you think we should interview, let me know so I can get them on. I got some people that I need to contact so I can kind of schedule out some interviews. The goal, because we do this weekly, I'm trying to get to a point where I can do 2 interviews a month, and then just 2 where we can breaking some stuff down, like in full-fledged details. So you have a lot of different variety to tune into, because you might say, I like when she interviewed, versus breaking down topics or things of that nature. When it comes to the tax code, if there's any other segments or anything you would like to hear or see, for those who go to YouTube on this podcast, please let me know. We are always evolving. My little production came out halfway decent today. I'm getting in the swing of it, but I want you to know, like I said, we recorded this the week of this is coming out the week of Thanksgiving. Definitely at the start, I told you, like, it's so much to be grateful for. Like, dig deep. Like, if nothing more, be grateful that you can open up your eyes and breathe. And for those who need help, like, find a shelter, uh find a place to serve, uh go out to dinner if you just like, I just can't take it because I'm so overwhelmed and stressed. uh or get you a hot pocket or some ramen noodles, just like, with like, find some place safe to be able to make some good memories during this time. I am grateful to be able to have this platform. I'm sitting here thinking about it and thinking about what the year is. It didn't end up the way I wanted it to be as I'm looking going into Thanksgiving, but we made some progress, and I've gotten better ideas, and I have an awesome team, and I've had some great relationships. I've had some clients that have come. I've had some clients that have left me. Um, and it's all okay, because all of it is growing pains, and it all makes us better. But I'm so thankful and I'm so grateful that no matter what, I would still come on and share these tips in this way. I love taxes, y'all. I love the tax code. I want to demystify it. I still will be the tax cop. I'm so grateful to see where this goes and how I can perfect this and make this better. And we see the evolution of it. So I'm grateful for those who listen. I'm grateful for anybody who's heard just at least one podcast, be it from an interview or anything, who's taken one nugget and applied it to their situation. Y'all, I really do want you to do better. We are here. We are available. We will be recording the course. So that will be coming. We have a whole course on audit proof your life and your business that we will be releasing either later this year, beginning of 2024, so that we can work with those people who really want somebody to take them through and help them figure out how to do it right. Lay the good foundation to make sure that this part of their life, they don't have to be stressed out about. And so that's what I have for you all this week. I thank you for tuning in. Be safe. And next week, we're going to come back with some more stuff. Hopefully it all makes sense and it flows, and you love on it. And if nothing more, y'all know I'm always going to bring record keeping into it in some way, shape, or form, because that's really how your documentation is really what gets you out of a lot of situations when it comes to auditing at the federal and state level. And the more documentation you have, and a team to help do the research, where we have precedent of cases to be like, look, no, this is what happened, and put that thing together. Just the beauty of it. Tax is the best marriage between accounting and law that could ever exist. And helping people with tax problems allows us at Total Tax Experience to be able to do that. And I like seeing it from the front end, because then I know how to prepare my people when we do tax prep to be like, don't be in no situation fooling around with this, because I don't want to answer this 2-3 years down the road. And if we do, you best know I already have all the documentation, so that all those clients that automatically are in my audit protection plan, we protecting them. Okay? All right. Talk to y'all soon. Have a great Thanksgiving week. Drive safely. Love safely. Yes, please love safely. Get all the hugs. Get all the collard greens and macaroni and cheese and potato salad and bread and all the kind of stuff. I'm as y'all can tell, for Thanksgiving, I'm here for the sides, not the main course. So get all you can, love on all you can, have a great time, laugh all you can this week. Um, and I can't wait to see y'all next week. Peace.